the buyers who are buying now are going to have an opportunity to really drop their rate
Right.
at very minimal cost.
Welcome back to another episode of Change in the Market. I'm your host today, Kevin Shamala. With us is author and CEO of the Masiello Group, Chris Masiello. How are we doing today?
Hey, Kevin, good to be with you.
Thank you for joining us as always. And today we've got a great episode with a special guest, Laura Chapman, loan officer of CMG Financial. How are we doing today, Laura?
Hey, Kevin, doing great. Thank you.
Thank you both for joining us today. We're excited for this conversation to give you ideas of programs out there from banks that will assist you in purchasing your home. And so that's going to be the basis for this conversation today. Chris, I'll let you lead us off as we dive into this conversation with Laura.
Good to be with you. Laura and I have had the opportunity to work together for a long time, right?
A long time. Yeah, I think
a long
going on
time.
20 years now. Yeah.
Yeah. And what we wanted to talk about today was what are the different loan programs that are out there? With the rise in interest rates, of course, as we know, mortgage products have gotten a little more creative, and there's a lot of variety out there, and especially for like first-time home buyers. So we thought it would be great just to hear your view and talk about some of the CMG programs and just what you're seeing, what people's preferences are.
Well, again, it's good to be with you both today. And like Chris said, we worked together for a long time. I think we're going on 20 years now, Chris.
Yeah.
So I think everybody is aware of the fact that interest rates in this market are very challenging. And I think what we're seeing is that the biggest obstacle for buyers in this market is actually the interest rate, especially for first-time home buyers, right? Because, if you go back a couple of years ago, when all that craziness was happening during the pandemic, I mean, we saw interest rates that were in the threes and even as low as 2-something in many cases. So I think the struggle that we're seeing in this market, which is contributing to the lower amount of inventory that's available for people to buy, is the fact that homeowners who may have bought a home or refinanced during that pandemic time are not willing to part with their current mortgage, 3%, to step into another home or another mortgage that might put them in the let's say high sevens. Even we saw rates go into the low eights recently. So, that becomes a big challenge on so many levels. What some lenders are doing, CMG Home Loans is a nationwide company. We're licensed in all 50 states. And so we have different loan officers in all the different states. And what we're doing is but we've got some niche programs and thinking out of the box, if you will, to not only help the buyers get into the homes that they're seeking, but also to even help sellers sell the homes or to attract more buyers. For instance, I'll just give you an example for first-time home buyers. In New Hampshire, for example, where I'm licensed, and a few other states as well. In New Hampshire, through the New Hampshire Housing State Agency, we can work with first-time home buyers and get them into either government or conventional type loans, depending on their credit and their whole profile, and even get down payment assistance programs for them. Really phenomenal, $5,000, $10,000 as a down payment assistance. It's written as a second lien, if you will, against the house, but it's forgiven after 5 years. So the buyer never has to make a payment on that, which is kind of cool. But what's great about that program is if they qualify for those New Hampshire housing programs, the rate that is set by that state agency is a good point to point and a half lower than what you'll see for the current market rates. So whenever possible, especially with first-time home buyers, we're going to try to put them in those programs.
Yeah. Well, one of the things that we've been talking about is that interest rates are temporary and that the purchase price of the house is permanent, right? And so the old expression, right, you date the rate, but you marry the house. And really these rate programs that people are having now, that are surfacing in the lending industry are really just a short-term tool to get people right into the house. And we all know that interest rates are going to start to go down at some point, probably in the near future. And just to position people so that they've locked in their sales price, but then they'll have the opportunity to refinance down the road. And you guys have a program like that too, right? Where, why don't you walk everybody through how that works?
Sure. Yeah, you got it. Yeah, exactly. I'm glad you brought that up. We have a program called Rate Rebound. And so what we're doing is anyone who's buying a home now at these higher interest rates, once we close on house or that property with that buyer, after 6 months, and once rates start coming down, and as long as they've gone down at least 0.5% on their loan, we're offering a no lender cost refinance. So essentially a no cost refi. And we're also giving $1,000 lender credit to cover, third party fees like appraisal, title insurance, things like that. So the buyers who are buying now are going to have an opportunity to really drop their rate at very minimal cost. Yeah.
Yeah, and really what that kind of broadcasts to buyers, right, into the market, is that there is an anticipation that rates will be going down in the not too distant future. Right. And I think, and it's interesting how the lending industry has really positioned that, and that's a great program because you're teed up. If you're a buyer now, you're teed up at a price before the prices are going to start really going up, because it is now just commonly understood that once rates start to go down, prices will go up significantly because of the lack of supply.
And the beauty of that, of course, is the equity that's developed over there.
That's right.
Yeah,
it's almost, it's kind of funny, right? It's almost like, really, if you think about it, buying into this market now, utilizing some of these programs that like CMG has, it's really like sweat equity. You're not putting the physical labor into the house, which is where sweat equity, the term, came from, right? People doing their own renovation work and stuff like that. But you're doing it intellectually, by making the smart family business decision, and that's where you're picking up the sweat equity.
Good point. Yeah, good point. There's another really attractive and aggressive program that we have. I just thought of it, called a temporary buy down on the interest rate. And what I love about that is, you can pay discount points to buy down the interest rate on a permanent basis on a like 30-year loan. And while that's a great opportunity to lower the interest rate, I'm not really recommending that right now, because you're paying points up front for a rate that's a little bit higher when we know that in 6 months from now we'll probably refinance you for basically no cost. So instead of going that path, the temporary buy down program allows you to take the current market rate, and for the first 1, 2, or 3 years, adjust that rate lower to help you ease into that mortgage payment. So let's just say the going rate is, I'm just going to throw a number out there, 8% on a 30-year conventional loan. You can buy that down for the first 2 years, for example. So for year 1, your interest rate would be 2 points lower. So it would be 6% for the entirety of year 1. And then year 2, your interest rate would be 7%. Year 3 through 30, you're at 8%, or the note rate. And what's great about that is that during the first year or two, you're going to have an opportunity to refinance with that rate rebound program. So any money that you put up front into the temporary buy down, which goes into an escrow account, it's your money. So anything that gets unused at that point will be used to pay down the principal.
That's right.
Yeah.
Yeah. So it's really like putting together like mortgage Legos, right? You can put different programs together to benefit from it. That's great.
Yeah.
So I think that's of course the benefit of our partnership with CMG, and it's such a creative company, and there's all sorts of creative solutions out there for people, and I think we've talked a little bit about, by the time it's the right time to move, and let's say, like in this case, buy a house, it's kind of too late, right? And so the opportunity really is now for people, and that's really one of the things that we've really been trying to hit home with people, is that we understand the rate environment's a little scary because people are used to, like you said, 3 and 4% rates, but rates are always temporary.
Yeah.
And there's great programs around, right, that allow you to move into action now and take advantage of the current pricing environment.
Yeah, and I think, yeah, these programs are incredible. From my days from being a loan originator after the mortgage crash, when we had very little leeway, it's amazing to hear the amount of programs, flexibility that lenders, especially like CMG, are offering to consumers and clients. One thing I want to make sure we add to this conversation as we move through is, as people are listening to this about these programs that they can potentially take advantage of that might help them ease into the rate or ease into the mortgage or make that buying decision. And sometimes people think like, oh, I'm not qualified for that. Like I have to have like a 780 credit score and like a $200,000 in the bank. So can we lend an ear to that and some more insight as to maybe just base qualifications that so people can understand how they can take advantage of some of these programs?
Yeah. There's a common misconception out there that you need to have 20% down to put on a home, and you need to have, like you said, 780 credit scores. And, nothing could be further from the truth. A lot of programs will, 620 is kind of the magic number for government loans. There are programs that go lower than that on credit scores, but if we can bring someone in on a 620 credit score, there's some things we can do to help them get into a home with as little as 3% down, and in some cases, 0 down payment. I mean, there are USDA has a program called rural housing, and of course, it's targeted for rural areas. There are some income criteria, but as long as the customer qualifies, that's a really good program. With folks that have very little money in the bank. Just enough to maybe cover their closing costs. And even at that, if they have, I've had people walk away from the closing table with a check. So, that's not common in this market, but, there's the rural housing program. And then of course, we love our veterans. We love the VA program, phenomenal loan program for veterans to get into a home with 0 down payment. Actually, that's, I think, one of my favorite loan programs because there's no PMI. When you're putting down less than 20%, you're going to, with a conventional loan or an FHA type loan, which are great loans, you're going to have some sort of a PMI or mortgage insurance. VA doesn't charge you mortgage insurance, So in honor of our veterans, it's a great program. And then there are other programs with as little as 3% down, Kevin, and depending on the part of the country where we are originating and the income criteria. So lots of creative things we can do to help our buyers get into their homes.
Yeah. And Laura, what about 3, 5, 7-year ARMs? How effective are those right now?
You know what, Chris, right now the ARM interest rates are not as aggressive as the longer term instruments, the 30-year notes and the 20-year notes. So we're not really, we're not finding a lot of people are being, tempted by the ARM programs. So there's just not a lot of give there right now.
I understand.
Yeah.
Good to know.
Yeah. So, the market really is ripe for conventional buyers, right? Or cash buyers. And we know that to be the case. All the realtors out there, they're, whenever possible, we're going to try to put your buyers into a conventional loan program because that's going to give you the best opportunity to have an accepted offer. But sometimes you just can't go that way. Sometimes the buyers just don't qualify. And there's really, government loans, VA loans, FHA loans, they sort of have a bad rap, and they really shouldn't. They're just such a great way to, they're very aggressively priced programs especially for the first time home buyer. So.
Absolutely. My first home a while ago, I purchased the FHA mortgage, right? And I think as you're pointing out to our listeners is that there are creative ways that you can go about how you package or and this is what Chris and I and Peyton and I have been discussing over the last couple months is being creative and finding how to take advantage of this opportunity right now. And this is why we're having this conversation today, as you're alluding to, is, we have programs that allow you to be creative depending on your situation so you could make that buying decision. And so we've been talking a lot about the buyers, which is great, but what programs are out there from the loan origination side that might help sellers in this market offload their house or make that decision to sell, to move into their dream home, right?
Another great question. And CMG being on the cutting edge, right? So we have this program. Actually, we just rolled it out not too long ago. It's called List and Lock. And what that allows sellers to do, because I think sellers, realtors and sellers are feeling, getting a little frustrated at times when, well, let me back up a little bit. The inventory is moving, but in certain markets where it might be a little bit more challenging, sellers are willing to maybe adjust their price, lower their price, or, somehow make an adjustment to bring in more buyers, to make it more attractive to buyers. And so the List and Lock program is a program that allows sellers to offer seller concessions, or to pay points, if you will, to a transaction, not to lower the purchase price, but to advertise a lower interest rate. So for example, let's just say, for example, you have a $300,000 purchase price on a home and the property isn't moving for whatever reason. And the seller says, I'm willing to lower my price, maybe 20 grand, to bring it down to 280. Instead of doing that, if the seller is willing to pay up to 3 points, so that could be 1 point, could be 3,000, it could be 2 points or 6,000. But in any case, it's a lot less than they're needing to lower the purchase price. By doing so, we can lock in an interest rate for 60 days for that seller to advertise to their buyers. Hey, if you come take a look at this house, I'm going to cover the concession so that you'll get an interest rate that's a full point, like lower than the market rate. So if the market rate was 7.875, they'd be able to advertise, if they pay 1 point in that concession, they'd be able to advertise a rate to the buyer pool of, say, 7.25, for example, and even lower if they're willing to pay more points.
And they could use the rate rebound program down the road, right?
Exactly. So all kinds of neat little tools to make it, to get our buyers and sellers together.
Yeah, that's great.
No, that's incredible. And I think one conversation or one question that people might have in mind, right, based on this conversation is, how are transactions going on the loan origination side, right? Are we seeing a decrease because of inventory? Are we still seeing a consistent amount of business come through because people are taking advantage of some of these programs, right? Just so we give an overview base idea for people to understand that. As Chris and I again have been talking, like, hey, like people are still moving, and by the time you're ready, you think you're ready, it might be too late. So
yeah, I mean, people are moving, and life situations that get thrown at people, therefore they have to move, they have to relocate, they have a family situation, whatever. People are moving. Mm-hmm. I will say this: I'm CMG and me, my own personal business, I'm pretty consistent year over year. Now, the last 2 years were sort of an anomaly for everybody in the business, right? I mean, realtors too. I mean, we were all just like crazy,
Well, the economy was just reacting to the pandemic,
I mean, we were working, 6 a.m. to midnight. So, and I know a lot of my realtor friends were doing the same. So, so the last 2 years aside, what I feel like the market we're in now is similar to what we had prior to the pandemic. So yeah, it's still pretty consistent. Yeah, things are moving. Yeah. In spite of the rates, right, Chris?
People need housing. I just was interviewed, for a publication, and we've talked about this. In the last 15 years, we produced 50% fewer homes, and yet we have, 3 major demographic groups all needing housing. Never had that before. There's going to continue to be demand. I think that's the reason why really everybody is whether it's financial advisors or mortgage originators or people in the industry, is really advising people that if you can do it now, you should be doing it now, because you're going to be getting in before appreciation really upticks with lower rates. Just to kind of segue to close, I think one of the things that we're seeing here is that it's kind of this understanding that all the solutions are hiding in plain sight. You just have to be a little curious about what they are.
I think that's a fabulous way to close. I mean, I think this conversation is going to provide a lot of our listeners with the tools and extra resources they need outside of what we've been discussing with Chris, right? Because we've been discussing more the real estate side outside of the transactions when it comes to loan originating. So I think having our listeners understand what programs like CMG Home Loans are providing nationally across the board and how they can take advantage of those is going to go a long way to helping them understand that the time is now. You've got programs to assist you, and there's ways for you to be creative. So thank you so much, Laura, for joining us today. Feel free to close this out with any contact information you want to leave or any last bits of tidbits you want to throw out there for our listeners.
Oh, wow. Okay, great. Thank you. Yeah, I'd love to leave my contact info. I agree with you. The time is now. Hindsight is 2020, right? Not to sound cliche, but we look back on 3 years ago and even myself, I said, gee, I wish I would have bought that lake house, because now look at it, So, and 3 years from now, we're going to be saying the same thing. So yeah, the time is nigh. So again, I'm Laura Chapman. I'm loan officer licensed in New Hampshire, Mass, Maine, Vermont, Florida, and South Carolina. But CMG Home Loans is nationwide. So my contact info, if I can share it, it's lchapman@cmgfi.com. And my phone number is 603-275-0890. Would love to have a chat with anybody out there.
Thank you so much for joining us. Chris, thank you again for your time today, and thank you for dropping insight for our listeners. Thank you, everybody, for tuning in to this week's episode of Change and the Market. We truly hope you enjoy it. Please like, subscribe, share with your friends, clients, family, share across your social channels, and we'll see you next week for another episode of Change in the Market.